morning everyone, this is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss what happened in the Fed meeting last week and what is the outlook for dollar rupee pair for the coming weeks. As we have discussed in our last week video, that we have to be extremely careful in the next following three events, which is June Fed meeting, Jackson Hole, August meeting and September Fed meeting. If any of these three meetings, Fed says that they will be increasing the interest rate or they will be reducing the bond buying program, market will react negatively to it and equity market will fall, DXY will increase and all emerging market currencies will depreciate, including our USDINR pair. And exactly the same has happened. Equity market across the globe have fallen. Dow Jones fell more than 3%. Dollar index, which was trading at 90.5 level, moved to 92 levels. Rupee, which was trading at 73.30 levels, depreciated and moved to 74.20 levels. Now let us understand what has Fed said that has triggered all of this. They have acknowledged that inflation is a concern, first thing. Second thing, they have revised their inflation target from 2.4% to 3.5%. And they have acknowledged that interest rate they have to increase instead of 2024, they have to increase the interest rate in 2023. Now let us come to the second part of the presentation, that what is the outlook for dollar rupee pair for the coming weeks. Let us analyze the positive factor. The first factor is US Treasury Yield, 10-year US Treasury Yield are not rising that much. After the Fed meeting, it went to 1.58%, but again on the closing, it has come below 1.5 level. Second positive factor is that we have some IPO and QIP coming in the next week. Vodafone and Hindustan Copper is coming up with QIP. And the third positive factor is Indian economy is reopening. Now let us understand what are the factors that can lead rupee depreciation. The first factor is rising dollar index. After the Fed statement, dollar index has moved up and there is a direct correlation, positive correlation between dollar index and dollar rupee pair. If dollar index continues to move higher towards 93.5 level, then dollar rupee pair will definitely depreciate. And the second negative point is rising crude oil price. As the world economy is reopening, we think that the crude oil price will continue to rise and that will add pressure to dollar rupee pair. Now let us understand what is the RBI stance. RBI will definitely buy on all the dips. RBI have bought aggressively at 73 to 73.20 levels. They have protected 73 levels basically. If any dips come, RBI will definitely buy in coming days. Considering all of these factors, there can be two scenarios. Scenario 1, market accepts Fed statement and moves on. In that case, dollar rupee pair will move in a consolidation phase. It will consolidate between 73.30 to 74.50 levels. 73.30 will act as a strong support and 74.50 will act as a strong resistance for the pair. Scenario 2 can be where market continues to react negatively with Fed statement. In that case, dollar rupee pair will break the key resistance of 74.5 level and then it can move towards 75.20 to 75.5 level in a very short frame of time. Probability of scenario 1 is 60 to 65% and probability of scenario 2 is 30 to 35%. In the end, I would like to end with a thought. If you cannot do great things, then do small things in a great way. नमस्कार, जय हिंद, फिर मिलेंगे.